So I'm currently in a short that I want to walk you guys through. I'm up around 3K, going to be trailing my stop soon once we work our way towards these equal lows. But let me kind of run you guys through the execution here and what I am looking to see with this trade. So far, bigger time frame in the morning when we look at the overall price action. And going into the morning, I wanted to see the market rebalance back to this 4-hour fair value gap when we kind of zoom out here and look at the overall price action from the week. We had rebalanced back to OTE of this price leg. So when the price ends up rebalancing back to 0.62, 0.79, we call this OTE, which is optimal trade entry. It's an area in which I want to see the market reject, and I want to see reversal patterns, right? So what is a reversal pattern? What am I looking for? Well, I'm looking for manipulation higher to then break lower to give me a bias that is bearish. So market ends up having this internal high that gets taken. We end up taking this internal high, putting in a bearish SMT where there's a divergence between the assets, and then we end up breaking and having a lot of displacement lower to see this continuation. Now, on the lows, we came down initially, took this form of sell-side liquidity, but there's also sell-side liquidity resting below us. So what normally happens when this plays out, right? The market will go to take internal sell-side liquidity, rebalance price back to, again, what? OTE of the price range, right? So we come back to OTE of the price range, and then we start to now reject this. Now, going into today, what am I looking for a rejection of that inefficiency? I'm looking for bearish order flow and a change in the state of delivery. So when the market ends up leaving these equal lows in the morning, right? We have stacked equal lows, right? In the morning, I thought that we were going to go ahead and take these lows, right? The market ends up opening. We take this internal high, we start to sell off, but we leave all of these stacked lows, and I know that this is going to act as high probability area of liquidity. So when the market starts to sell off and we run these inefficiencies to the left of us, right, these fair value gaps here, this is what I want to see to take a short. Now you can see I basically top ticked the entry on that pullback. Now, why did I enter there where I did? Well, on the 5-minute, there is a 5-minute bearish fair value gap that got opened up, right? So we run through the inefficiencies to the left of us. We start getting below these down close candles, and then we pull back to the 5-minute fair value gap. Now, once we pull back to the 5-minute fair value gap, we sell back off, we come back up, and we what? This is what we call turtle soup. So turtle soup is basically this internal manipulation to go towards the opposing draw on liquidity, right? If I know that the draw on liquidity is going to be these relative equal lows, right? Because we're rejecting from the 4-hour fair value gap, we're in OTE of the bigger time frame, we start having very big displacement here, right? And a lot of the times, if I can't recognize clean change in the state, then I want to recognize a clean market maker model with efficiency. So another thing I want you to understand is the volatility index, and something that you need to pay attention to with where we are in price action right now, is above 20. When the VIX is above 20, everybody should go on the VIX and put a line on 20. Anytime the VIX is above 20, I'm expecting efficiency. I'm expecting the market to be volatile and efficient towards whatever the objective is, right? What is efficiency? Efficiency is how efficient something is at doing its job, right? So the job, quote to say, for NQ is to hunt liquidity, right? And liquidity is acting as the objective for the market to push efficiency and volatility forward. Now, when I can notice that the VIX is above 20, again, aligning all these things, my bias, we're rejecting the 4-hour fair value gap, I'm looking for reversal. It's just it's basically all comes down to order flow affirming and denying what I'm looking for in price action. So now let's talk about, how I'm going to manage this trade. Now, the main area that I want to see the market go to is those resting equal lows. But I think the market can go a lot lower than that if we want to play this out as a bigger time frame market maker sell model. So we can end up selling a lot lower through this because there is still sell side liquidity resting below us. Now, the market could come down. We could take these lows. We could sweep them. Again, there's an inefficiency here as well. There's a 15-minute fair value gap. So we can come down, tap this, and then maybe rebalance higher. But if we displace through this low, it will become a change in the state of delivery, right? So if we end up displacing through this low, I would want to see the market go lower to then finish this as the external sell model. So how do I go about managing this trade? What I'll do is I will take partials once these lows are taken, and then I will leave my runners and I will start trailing my stop loss to go lower. So I'm in 14 micro contracts on my main account. You can see at the bottom corner, this is AMP live account. So you know that I'm trading on a live account. This isn't paper trade. But if I'm around in 14 contracts or so, I'm going to take off around 8 to 10 at this internal low and then let the rest of my contracts go. So what this will look like is we'll put 8 contracts here. And I also marked out standard deviation. So the standard deviation is this last leg higher, right? So from this low to the high that we got put in, this is my last leg higher, acting as a possible projection for the market to go. And I also want to look at areas of liquidity, right? There isn't really a lot. The only really thing is all the way back to the lows. So if the market does decide to be super bearish and we do end up selling all the way through them, then I would be, letting basically the market, I'll move my stop loss here too. I wouldn't want to see the market come back up. I could probably move this to break even. I want to see these act as propulsion blocks. So these down close candles on the 5-minute, I want to see these act as areas in which the market just will pull back to and then quickly reject and continue towards the overall draw on liquidity. So we'll see how this ends up playing out. Again, this is pretty much a risk-free trade now, which is always the best position to be in when you can have a lot of room from your entry and just move your stop and just let the market do its thing. So if the market does want to sell off and have a big move, I'm able to take advantage of it. And even if it comes back and stops out, I don't lose anything. Again, my secured profit of when I'm in this trade and I can see that I'm up $3,000, I'm not viewing that as that's secured, right? This trade is going to play out however it wants to. I'm not attached to the outcome of it. If we end up coming back, getting stopped out, it's totally fine, right? I'm not losing anything on it, and I'm not going to perceive it as a loss because I was up 4,000. And that's kind of how what a lot of traders do is like, we'll play tricks on us, right? The model is valid. There's no reason for me to overmanage this position, just to let the market do its thing and continue to kind of watch price action. So with watching price action, my goal is a couple things. Number one, not to be overconsumed by it. Right? When you're in a position, you don't want to be overconsumed by price action, meaning you don't want to consistently try to see things play out, look for what's going to benefit you. As soon as you take the entry, you accept the risk, don't overmanage, don't overlook for confluences, just let the market play out the way it needs to be. I think there's a clean draw on liquidity being these relative equal lows here. So that's going to be my main price target, take off the majority of the position, and then let the rest of the contracts go. So we'll take off around 60% of the position, and then let the rest of the contracts kind of run if we want to continue to sell off through them. So here is just now the waiting game and sitting pretty. Looking at ES, again, the assets are pretty correlated today. And then when this low gets taken, I will start trailing my stop, depending on how aggressive the move is. So we're at midnight open too. This is just some other things that we can kind of touch on here. We're at midnight open from Asia session. Asia session high had gotten taken. London session low is back down here as well as with the weekly opening gap. So if we want to end the week down at the weekly opening gap, that could be something that we see. Again, it all depends on the reaction from this low, right? If we are bullish and this wants to be a rebalance to go back higher, and for example, this would be turtle soup to go to all-time highs if that's the case, we would soup this low, right? So I would expect if the market is bullish, we do want to go back higher. I would expect this low to get taken, kind of immediately see something like this. And then I would get stopped in profit for my last couple contracts. But again, if we really displace through this, which I'm hoping to see, then we'll validate this bigger time frame model. Also, when I look for areas, right, I want to notice any inefficiencies that have not been tapped yet. So this fair value gap would be possible next target with a follow through. And here we go. In the end, I hope it's. So again, what I'm looking for, right, is obviously depends on all going to depend on if how much we break through this, right? If the market really starts to speed up here towards the downside, and we break through this change, I really want to see lower. I want to see this bigger time frame model play out, right? Again, right now, just following the plan, not touching anything, letting the market do what it wants to do. So something to be weary of, though, that we do have is this internal low did get taken on ES. So this low did not get taken on NQ, so there is technically a bullish SMT here, which could rebalance us higher. Again, if the market is bullish, then we would probably get bought up from here. In the dark. So now you might be asking yourself, and this is, we'll kind of get into this conversation where what happens in this type of position when you enter a position, comes almost close to your PT, doesn't get hit, starts to reverse back on you. So when I look at this, there's a couple things, right? And this also depends on the trader. Like, and I'll be honest, within my trading, the way that I trade is when I enter a position like this, and I trail my stop loss. Like, for example, if I've been trailing my stop loss, I would have probably be stopped out right now. So it'd be up like a 2K trade. But for me, I would rather let this position do its thing and not over manage it. Even if there is an SMT here, I could scale at these lows when that low gets taken. But in my opinion, it's hindsight, because all of these stacked equal lows, there's no reason for this to not get taken. If the market wants to play games, that's fine, right? This is a risk-free trade now. If it comes all the way back up and stops me at break even, it is what it is. I don't believe, like, when it comes to the idea of taking partials, I believe in taking partials, but I don't believe in breaking your plan to do so. Right now, the market hasn't invalidated anything. I still believe we're in sell side of the curve. This SMT could be here just to rebalance price and then continue back lower. Again, this is where you start falling into over-examination, where, again, the original plan stays still. Doesn't matter what happens in the price. If we get stopped at break even or stopped in profit, it is what it is. If we end up rejecting and go lower, it is what it is, right? So entered the position. I want to see the buys play out, which is, again, I believe these lows are acting as a clear draw on liquidity. So I'm just going to let the market do its thing. And from there, we will let the market either affirm or deny that. But there's no reason to kind of sit here and get fearful or get scared, right? Before I even enter the trade, I accept the risk. And right now, I'm accepting that if this comes back and stops me up at break even, that's fine, right? Like, I have no attachment to whatever the outcome of this position is, right? I see the trade, I enter it. I don't care and like acknowledge this as, oh, I was up 4K and then up this. It doesn't matter. That's all noise, right? What matters is what happens at the entry and what happens at the close of the trade. So we'll let this trade play out. We'll see what we want to do. Again, right now, rebalancing price. We do have a internal SMT, so I want to see this spark us lower. If we want to hold it, we could come up, tap the 5-minute for value gap, but we'll see, and we'll continue to watch. But right now, with this bullish pressure, if that's the term you want to use, after taking this low, it is looking like we do want to possibly rebalance higher. Again, so far on the bigger time frame, failing to break lower. No close below. So again, it depends also on the trader, right? When it comes to trailing, normally I'll only trail my stop after the objective is taken. So technically the objective has been taken, right? So the tricky thing about this is technically the low is taken on ES and this SMT gets put in. So could I have scaled this or trailed stop? Yeah, I could have. But it kind of went too quick. So it looks like this will probably get stopped at break even or in profit. A little bit in profit, stops a little bit below it, but probably will get stopped here. So again, this is the cost of doing business. I'm glad I recorded this so I can, post this so that you guys are able to kind of see this trade. So I would say best case scenario, because I didn't recognize this low getting taken sooner, this low getting taken should have probably been the sign to trail, right? Because I do when objective gets taken is when I trail. So since the first objective is this low on ES, I probably should have moved the trailing stop to these highs. Looks like ES wants to go run these highs here. So far, this is looking bullish for the market. Looking like this wants to be the soup to go higher. In the darkness, I will... So how would I journal this trade, right? If this gets stopped at break even, what I would journal for this is recognizing I failed to see in the moment that the first objective in which I'm taking, right, which is if we're targeting and volatility is pushing towards, again, the efficiency of whatever the objective is sell-side liquidity. The first form of sell-side liquidity, obviously I want to see this become low resistance liquidity, but this first low is the objective for sell-side. So as soon as this low gets taken and we put it in an SMT, that's my sign to trail my stop. So I should have been stopped in profit around this high. And there it is. All right, so again, journal for this. Trail should have been stopped, or trail should have been moved at this high when this initial low was taken. Again, overall model, super, super clean trade. Just kind of one of those, again, one of the things that I want you to like notice about this type of trade, and whenever you find yourself in this situation, is I can sit here and fall to the game and the temptation of being frustrated and, oh my gosh, I can't believe that this happened, right? The market was 5 points away from my PT, and then I ended up reversing and I got stopped at break even, right? There's probably going to be a bunch of comments being like, Justin, you were up $5,000, $4,000, and you guys stopped at break even. I can't believe you did this. This is just normally how I trade, right? Now, the mistake was, there was a mistake, right? The mistake was I did not recognize in the moment this low getting taken, which should have been my sign to trail my stop loss, right? The sign to trail my stop loss is when the objective gets taken. That is when I trail my stop loss, the first objective. So should have been stopped in profit around this area. But I'm going to post this whole thing on YouTube so you guys can see it and look at it. But this is kind of a cool way in which this trade played out so that you guys are able to see, like, this does happen sometimes. And it's up to you to allow it to affect you when you're actually trading. Because again, I can sit here and be super frustrated and be tied to the outcome of tied to the money. But like I said, before I even enter the trade, I'm expecting to lose, right? The risk that I'm putting on the table, I'm expecting to lose. It's not mine. So this trade and seeing how it played out, the way that I go back and journal it as I look at, okay, where should I have been trailing my stop loss? When this does happen, there is an SMT in the opposing direction. That is my sign to trail. Didn't recognize it in the moment until later. Now you might have said, Justin, when you did recognize it, why didn't you take it off here? If I fail to recognize it, normally I will just let the market play its toll, right? Because there's a lot of times when we could put this SMT in, we could rebalance price, and then we can continue back lower, break the SMT. So normally, again, I don't want to overmanage the position unless it's super clear as to what I should do to manage, which should have been this initial objective getting taken. But I'll post this whole thing so you guys can watch it. Again, crystal clear. There's, this is as real as what it gets. So hopefully you guys enjoyed watching this little trade, demo live of an actual trade recording in a session. So I'll start doing more of these as well within my trading and try to post some more recordings in the moment for it and analysis. So enjoy your day, and I will talk to you guys later. Peace.